Now, according to bleak forecasts, if Sibanye Stillwater's current price levels stay where they are this year, the Platinum Group will break its lender covenants. Analysts say to keep the company afloat, it would then be confronted with the decision to either close its projects or raise $500 million to $1 billion. Joining us to delve deeper into the group's acquisitions over the years in greater detail is Financial Mail's Marc Hasenfuss. Marc, a pleasure. Good afternoon.
Good to be here.
Marc, right up until the deepening or the worsening of the commodities downturn, markets were quite bullish on Sibanye, and they were, trading on the fact that PGM prices just hadn't seen the dip that we've seen of late.
Yeah, look, I mean, obviously, PGM prices across all three baskets have not done well. I looked at them today. I think they're at the same level they were at the beginning of 2023. So it's not great. It's not not great prices. So obviously, with that, it puts pressure on companies to produce these commodities, and I think it changes the outlook completely for something like Sibanye, whereas you go from bumper profits into potentially very negative cash flow, with the resultant strain on your balance sheet, which has been raised in the Financial Mail's article this week.
So what is interesting, Marc, and I must ask you, is then the balance sheet obviously under pressure at this point, and PGM prices really, nobody really can pin what a recovery may look like.
Yeah, I think that's the problem. I mean, I'm not a super commodity expert, and 9 out of 10 times I'm completely wrong. But I wouldn't like to predict any of the three prices. Rhodium's showing a little bit of guts, but the platinum and palladium very flat and kind of unexciting. So you need something to change. There is talk of maybe a undersupply in later this year or next year. That might help. I don't know if that's going to come to pass, but it's kind of a time that I suppose Sibanye's shoulders. And you must remember, Sibanye, it's a very popular share. If you go to Easy Equities, it's in their top 5 traded shares every week. So it's very popular with the retail investors who tend to be jittery. And, maybe this is the first commodity cycle for some. And this can be very scary if it drags down further. There's immense pressure, and you go into like a new zone of pain, and a lot of people tend to want to bail out there. So it's quite a scary position. You can't make easy predictions. This is, commodity prices are set by forces that, we can't really see. So it's not an easy one to predict. Having said that, Neil Froneman is a very experienced operator. I remember meeting him for lunch one day, many, many years ago. He's a tough guy. He can just resist these things. He's a cool customer, and I think the business is in good hands. But good hands can only do so much. If everything turns against you, there's not much else you can do.
Yes, and of course the issue, Marc, of the debt covenants and a possible recap. How likely is all of this?
Okay, so I'm looking at Sibanye, and I suppose, as I say, I'm not a commodity expert, and I'm not a resource writer by any means. David McCarr probably know better than I would. But, at the last picture, it wasn't a disaster. I think 25 billion in debt, there was quite a lot of cash. But now we look at the results, it's quite a big loss for this period. It's going to swing. I saw a prediction of cash flow outflows of 7 billion rand. That's hectic. That's going to change the balance sheet immediately. It changes very fast, and it can change fast the other way as well. And suddenly you can get cash flow coming in. But at this point, it looks like anyone hoping for a final dividend from Sibanye, I'm not so sure about that. I kind of doubt that. But it's going to be big cash flow pressure. It's a massive outflow.
Of course, you mentioned Neil Froneman, and of course, experienced leadership there, and he still seems to be bullish on Sibanye, the recovery of PGMs, and even more acquisitions.
Yeah, I mean, spoken like I suppose a veteran resource man. This is probably a good time to buy certain assets. As you know, they've moved into kind of green energy. There are quite a few baskets there of sometimes commodities I've never even heard of and don't know what they're used for, but they're moving into this area. I think he mentioned in the story lithium was a potential option. I don't know what you buy. He has bought things before, just possibly the wrong time to have bought them. Maybe if you waited and kind of shored up the balance sheet. But yeah, I mean that's all with hindsight. It's very easy to talk with hindsight in the vagaries of a commodity cycle. But he has bought these assets. He's got that appeal. And what it does is, I mean, Sibanye, as you look at it now, it started off with gold. It's got the PGMs. It's got the green energy stuff. It's becoming quite an interesting, I would say, describe it as an adventurous mining house. If you compare it to the more staid examples of Anglo and BHP, South 32, Glencore, for instance. But yes, it's going to be for the guys who can hold their nerve here. I prefer to be in the Satrix Resi Fund and have a spread of shares than back one thing. But yeah, look, if you get it right with Sibanye, it'll be a good one for you. I don't even want to think about getting it wrong.
One of the things that's very, I think, evident with the mining sector and resources sector, Marc, is the fact that there's a scramble for these green assets. Sibanye has in the past gone on this aggressive acquisition journey, seemingly getting ahead of these acquisitions. But when we look at ones that could come up in the future, these assets could be overpriced.
Yeah, as I said, maybe the commodity cycle dictates the price a bit, but I think if there are other companies looking to build green energy, portfolios, so they're not the only one looking. So yes, I think if I remember correctly, they were outbidding an asset recently. Might have been in Zambia. I might be wrong there, but I know that. So yes, that is the risk. You don't want to stretch your balance sheet, overpay for something. Overpaying something costs you for many, many years, and that you don't want to do that, no matter what the cycle does, to be honest. So hopefully if he does look for opportunities, they're well priced, bargain basement stuff, possibly greenfield even. They can be brought on stream as things get better. But I think Neil Froneman understands the cycle better than anyone. I think he will be cautious. I don't think he's going to do anything super reckless, to be honest.
Well, Marc, I think our viewers can certainly catch that article in this week's Financial Mail. Thank you so much for your time today. It's been a pleasure hearing from you. That was the Financial Mail's editor-at-large, Marc Hasenfuss.